TGIF Warriors, how's everyone doing? Stick around for Justin Hertzberg. We'll take some questions regarding the FX brokerage industry. So, hi Dan, how are you? Craig, how are you? So on Fridays, I'd like to look at weekly action. I didn't get a too close reversal in the Dixie, but it looks like a nice little reversal week. I don't have a high conviction on this candle, but you know, maybe that's just how I feel psychologically, because I don't think the dollar rally's over. But I could see the potential for the next several weeks of us pulling back down towards 92 or so, putting in a right shoulder or developing the cup, the handle of the cup down here before the next big rally. That should result, and already began, with some relief rallies in the metals. We had a nice little 3-driver, still sharply lower on the week, but this was kind of a 3 here. The only thing I don't like about the gold is this reading on the RSI here was a confirmed low on the 4-hour. But for us to rally back to 1280, 1284, back to major support is not out of the question if we get that pullback in the dollar. Everyone with me? Hi, Dave. Yeah, Dina, I've heard that. Yeah, I read Jim Walsh's stuff, and you're right. There's a tendency into the end of the month, especially this is the end of the quarter, right, for window dressing. Yeah, so that people could show that they're holding the stocks that have performed, even if they're just entering the position, you know, in the last week or so. So that's a possibility. Hey, Paul. So, you know, I've had a tradition for a long time. Everyone wish Paul Machi a happy birthday. Happy birthday to you. Happy birthday to you. Happy birthday, dear Paul. Happy birthday to you. Hope it's a great year for you, Paul, not just in trading, on all levels. So, how, you know, when you have Skype open, the people you know, it always lets you know when it's their birthday. Happy birthday, Paul. So we're also getting this rebound in silver, right? Had a little 2-drive here. I still think that silver we have to take out, and I've been saying it for a long time, this low. So if we pull back down here, it's going to be like about 1580 or so. It's going to be worth a shot with stops under 1560. And I have noticed lately with gold and silver getting killed, some of the gold shares are acting okay. I mean, they're not acting great. The silver shares look more vulnerable, but this is one I have traded in and out of. It's not reflecting the recent gold weakness. I mean, we're nowhere near the lows. It led on the way down. So that's McEwen Mining. This is Yamana. So it looks like it could sell off. But the silver shares actually look kind of vulnerable to me. You know, like this is Coeur d'Alene, and this is Hecla. Maybe we get one more drive down here, and I might take a shot at some mining shares. And the yen, I don't think the yen is done, and we can't ignore, I know it's easy to be complacent, but we can't ignore, even though we're recovering today in the S&Ps quite a bit, and maybe it's going to make one more run into the end of the week, but we're still a little bit lower on the week. on the S&Ps, but it certainly held where it had to this week. At least now you know where there's going to be some problems in S&P, right? We have this defined, this 2740 level. A lot of people watching the soccer. So here, you know, we traded at it intraday, but next time under 40, you know, we'll be looking at 2700 or lower if we get a close down there. Your guess is as good as mine if there's going to be one more rally assault. But I will say this, see this in the S&P, the leadership has been NASDAQ all the way, and it doesn't look as strong. Can we get to that 73.50 level I was talking about? I thought this might be close enough, so we'll see. If we get some follow through today while everyone's watching Brazil play soccer, then I'd say it would probably change. And yields still look like they're headed lower to me. I'm still looking for yields to trade under 275. So I think that's any questions for me? Because I know a lot of guys want to watch a game today. Check the cable for you? Sure. And I know I want to get Blake in case he has some
I'm watching the game.
You are too?
Yeah,
okay.
Yeah, just please continue on.
Okay. So cable, something Steve talked about that we could have a relief rally, and here we are. So back at resistance here. I wouldn't chase it. There were reasons to try it down here. You know, it was like, okay, we're going to get some Brexit news, and it's a relief rally. But if the dollar's got, you know, further to fall, you know, back down towards here, then I'd say cable has a long way to go. So I don't have a lot of conviction about the dollar. I know it looks like it's topped out here. We had a couple of pretty good down days. It was massive glaring divergence. I think we talked about it live on the show the day it happened. It was Wednesday or Thursday, and we have this. So, you know, you could also be saying, you know what, this is a good break to buy after the explosion we had on the ECB. So that's why I don't have a lot of confidence in the weekly candle. So when in doubt, out. And the only thing I'm still looking to do is, you know, if we get a little bit higher in the yen, maybe it won't be until next week. You have a pretty negative week in the yen. It held where it had to. It retraced, but it's still my view that this is a rising wedge. I still think whether the market has peaked this week or it's going to, you know, hold together till the end of the month, that there's going to be a sell-off that's going to take the yen lower, that's going to take yields lower. So that's still the theme I'm working on. Crude oil is being affected by the recent blog that we put out. Yeah, I think that's a possibility, Assad. But there is an OPEC meeting today. I hope that helped you, Salah. Maybe you buy a break there. You're very welcome. So Blake is watching it, watching the game. All right, Steve Volge is watching the game.
So how's it going, Dale?
Good, buddy.
I am watching the game a little bit, but you know, I was actually out and about last night at a concert, and I got home.
Oh yeah.
Pretty late. It was a great concert. Believe it or not, it was outside. It was probably about 110 degrees when I got there, but right. But yeah, once the sun dropped, it was nice out. It was a fun concert. Unfortunately, you know, when I do things like that during the week, yeah, it's you know, 3 o'clock comes around really early in the morning, so I'm thankful
you
that
can't
it's
get
Friday.
Sleep after, you know, you're out at night and you're at a concert, you're pretty wound up, and when you get, you know, kind of when you got home, and it's hard to go to sleep.
Oh, for me it was great. I was out quickly. Oh. So out quickly. So, you know, I wanted to cover a couple of things. Now, first and foremost, yeah, if you guys can stick around today. I know this is going to be a great interview with Justin from Forest Park FX, and there's going to be a lot of people probably listening to the recording as well, as we're gonna put the recording out on YouTube later on today. But if you guys can listen live, you should, because he's going to be able to answer. Well, I'm sure Dale's thinking about a plethora of questions for Justin, but he will really be able to tell you about, you know, how they go through, you know, the process of finding their partners, what different brokers offer, you know, trends in the brokerage industry, regulations that might be coming up, and he's going to be a great resource for all of you guys and gals. So if you have any questions at all that you were thinking about, oh man, I was very curious about this regarding the brokerage industry, you got one of the best guys to talk to and to listen to here in the next hour. So make sure you stick around for that. They are our sponsor for the FACE webinar. We're happy to be partnered with them because their business practice is very similar to ours. You know, we like the FACE webinar, we don't really, I wish everybody was a ForexAnalytix subscriber. That'd be awesome. But in all actuality, it's not going to be the case. And the one thing that I am an advocate for sure, is to make sure that you guys are very well supported in your trading venture, whether you're using ForexAnalytix or maybe other tools, or ForexAnalytix and other tools. They follow the very similar practice that we do. It's like, if they can help you, they're going to help you. And even if you're not using one of the brokers that they are partnered with, to them it doesn't really matter, because they're looking for more of longevity of traders in this business. And so their thought process is very much in line with ours, and that's why I'm very proud to be partnered up with Forest Park FX, and a great group of individuals that are over there. So you guys should have a great interview today, Dale. Okay, now now I want to kind of move forward to the FX market. The FX market, we've seen this dollar pullback. Now let's talk about the dollar in general. This is pretty glaring and very obvious to me yesterday when you look at the dollar index. And if you read the analysis from last night in the dollar index, it was a key development. All right, first of all, we could not sustain the break above last October's highs. So you can see the highs right over here. We couldn't sustain that breakout. So we broke through resistance and we reversed. Now we also said, excuse me, it was a bearish engulfing candle yesterday. Not only a false breakout and a bearish engulfing. So if you didn't catch that reversal, you know, that it was very clear to me. And that's why I was like, I actually had bids to buy the euro dollar overnight below 115.70. Actually 115.75 is where my bid was. I looked at my screen. It's actually right there. I had a buy order and I canceled it already since it didn't get filled. So I was trying to buy the euro dollar just on a dip, and it never dipped. But that reversal in the dollar index was very clear to me last night. But you know, I don't like to run out and start chasing things. I'm going to try to, you know, get a better price. But you can see how the relative strength was divergent as we hit new highs yesterday. So that was pretty glaring. So you take the euro dollar, and the euro dollar is recovering. Now the question is, how far is the euro going to go today? And I doubt we take out this 50% retracement. So in other words, we might have already peaked for the day. But if we do, for some reason, get a move towards 117.20, this is a level that I might actually be interested in selling the euro or buying the dollar. In other words, buying the dip in the dollar. Now, one of the things that's happening over this weekend is there has been with Angela Merkel's opposing party, there's been some internal meetings and basically trying to have a new election, which could be announced as early as this weekend, which could be problematic for the euro dollar. And that's something that I think is not being talked about enough, which is something that I believe that we need to keep an eye on, is what happens in the event that there's, you know, Angela Merkel is losing a lot of support in Germany. And so what happens if another election is called? What happens if she loses? So these are things that I think are risks longer term for the euro, which means that I wouldn't mind shorting a euro bounce if, you know, we make it towards 117.20, especially today, because there are some risks over the weekend. But I don't know if we're going to make it all the way up there today. You look at the cable hit a downtrend line, 618 retracement, top of the resistance zone. It was like smack dab right into it at 133 and a quarter, basically, which is important, because now if you get a move above 133.20, you know it's extremely bullish. So from here, you know, there's a risk, I think, at this point of pulling back. Okay, but the flip side is if you get a move above 133.20, and that's going to be fairly bullish for the cable. One of the other things about the cable that we have to note is, let's go over to the weekly chart. And this is more going into next week. If we close up here or anywhere around here, that's a hammer on the weekly candle. That's also a false breakdown on the pound. So not only do we have a false breakdown, we have a you know, quite possibly a really key reversal candle on the weekly chart. So something to pay attention to. I personally wouldn't be short the cable. I wouldn't. But, you know, I think it gets really bullish above 133.20. Okay. The Aussie, I played this on the long side yesterday. If you're a ForexAnalytix subscriber, you're very well aware of the possible double bottom, downsloping. Well, this is a wedge, the wedge breakout yesterday. I played, you know, like I said, I played the Aussie dollar to the long side a couple of times yesterday and made some decent money. I wasn't long overnight on this breakout, but this is another situation where you might have a false breakdown in the Aussie. If you go into the week, you know, weekly candle, here's very similar to the pound. You've got a, you know, hammer, you know, possible dragonfly doji, you know, which is a good reversal candle, which suggests that we go higher. And so that's, and this is where the hesitation comes for me about, you know, oh yeah, I might want to short the euro if we reach 117 and a quarter. But the flip side is you got to look at all these other dollar pairs that are actually quite, you know, you take the Aussie, it looks like a good reversal setting up for the end of the week. Same with the pound. So will you get more dollar downside follow through going into next week? Chances are, yeah, if it makes its way through the Aussie, the pound, it's probably going to make it in the euro too. So you got to be a little bit, you know, for me, I got to be a little bit nervous about shorting the euro dollar if everything else is showing these reversals. In that Kiwi, same type of situation. We have a possible false breakdown in the Kiwi. You can see the false breakdown from yesterday. Okay, that has led to a reversal. And, you know, we were very much on top of this move yesterday with ForexAnalytix. So you guys should not have been caught off guard, for those of you that are ForexAnalytix subscribers. The one currency, obviously, I'm paying very close attention to today is the dollar Canadian. The dollar Canadian, even though I'm not long, I do have a pattern in play, still active in the dollar Canadian. But the fact of the matter is, it's the dollar Canadian. We had a very bullish breakout out of this triangle last week. But personally, I've closed out my longs actually very close to here at 75, I think 132.75 earlier this week. I am looking to reestablish dollar Canadian longs. The question is, how deep a correction do we get in the dollar Canadian? And I think a lot of that has to do with what the retail sales and CPI data comes out here in the next 10 minutes. So it's going to be pretty important data. If the inflation data comes in a little stronger or retail sales come in a little stronger, there's a chance the dollar Canadian can slip back to 132. But 132, I think, is going to be a pretty pivotal area, and you can see this blue line here. Okay, this comes in at right around 132, and I think this 132 is going to be very critical on dips. So what I'm trying to explain to you is I think downside is limited with the dollar Canadian. So I am looking for a dip, but you know, how far are we going to go? Not too sure. One of the other things that's happening also, and I just noticed it just now, is the dollar Mexican peso is breaking into new trend lows. We had an ascending wedge. We broke out the ascending wedge. You can see this, you know, looking for a move lower, and we're actually breaking through the 50% retracement that we stopped at yesterday, following the Banxico rate hike. So we had the Bank of Mexico hike rates yesterday. The dollar Mexican peso continued to fall. The Mexican peso continued to strengthen. It's strengthening right now. So, and especially if the dollar Canadian drops towards 132, the US dollar Mexican peso could drop back below 20 pesos. So keep that in mind. I think this is another development. It's an ascending wedge. We broke out to the downside. It was a pretty strong reversal pattern. We played it through our patterns in play. I played it on the short side, and I think it continues to move lower from here. You talked, Dale, are you still there?
Yes.
Okay.
Yes. Okay.
So you talked about the yen, and you know, there's one thing I want to talk about regarding the U.S. dollar Japanese yen. The U.S. dollar Japanese yen is firmed off of the, you know, off of some support. It's actually moving higher here as the dollar is moving lower against most pairs. But a lot of that has to do with the stock market. The stock market bounced right where it had to bounce last night. This is here's the daily chart of the S&P. It's a pretty important chart. And the reason I'm going to point it out is this breakout point, which comes in at 27.45. That breakout point was basically held not only once, not only twice, but 3 times now. So in order for the S&P to be bearish, in my opinion, we have to break back below 2750. So we've bounced pretty aggressively, or 2745, excuse me. We've bounced pretty aggressively, only almost 20 handles off of that support in the S&P. Now, the reason why I bring this up is because the dollar yen has had very limited response to that bounce and risk, and we just, all we did is we bounced back to the 200-day moving average. So I guess what I'm gonna point out here is, in the event the stock market comes under some pressure this morning, you know, it's Friday. You might, you know, I know the Dow has had 8 down days in a row. You might have some people say, you know what, let's go ahead and, you know, liquidate some of my long equity market positions. It's been a good run. You know, if you get a little bit of selling coming in a Friday, that might actually make its way over to the dollar yen. So, you know, keep an eye on the dollar yen. I think the dollar yen has not, it's correlated to the S&P, and this bounce has been pretty small considering the bounce that we've seen in the S&P overnight, and the bounce back in risk appetite overnight. So, but those are pretty much the things that I'm looking at. And guys, I want to reiterate, Steve is going to be here in a few minutes. He's trying to avoid the webinar like the plague because he's watching the Brazil Costa Rica World Cup match right now. Aren't you, Steve? See, he's not even listening. No,
I hate.
Nope. There he is.
I hate you. That's
I'm
for
just,
the record. I want to put it here officially.
you know, it's. Can you believe yesterday's Argentina game?
Yeah, I can actually.
You can. Why could you?
For 2 reasons. Because there are 2 teams that seem to really not respect themselves. This is England, I'm afraid to say, and Argentina. Why? Because they have magnificent footballers over the years, and they make one bad head coach choice after the next. I mean, if you see the head coaches, they're selecting, I mean, I'm afraid to say that they're a joke. Argentina yesterday played some kind of a formation, some kind of football that I couldn't even recognize, you know, what it was. I mean, wrong people for the wrong job, and people in, you know, in the soccer field had no idea what they were supposed to do.
I think you should coach soccer.
In all honesty, in comparison to what head coaches England and Argentina had been putting on, I doubt I can do worse. Let me say that.
Okay.
I doubt anybody can do worse, actually.
Would you be trading from the sideline if you got confirmations and you were coaching a soccer team?
You're right. Open iPad, right? And cool.
Well, Steve, we're glad that you're here. But hey, what I wanted to mention really quick is I want to make sure everybody's aware that we have Canadian Day coming out in a couple minutes, but in 30 minutes from now, Dale, he's going to have a great interview with Justin Hertzberg from Forest Park FX, who's one of the principals at Forest Park FX and who is also our sponsor. But the reason why you should listen to him and be around in the next 30 minutes is because he can answer any question regarding the brokerage industry and where, you know, things are going, both here in the United States, which obviously has different rules and regulations than, you know, your European or Asian brokerage firms, but really be able to answer questions and give you kind of the trend of the industry, no matter where you're at in the world. So I would highly recommend that you guys listen to Justin. If Forest Park FX can help you guys out in your trading, that's fantastic. I hope they can. But if they can't, they at least can point you in the right direction. And
you know, Blake, Justin also comes from a legal background, so
he does.
You know, you're getting that view through a legal eye, who's always looking at compliance and safety of funds and real important issues with brokers.
Yes, yeah, and that's what makes him just a superstar in this industry. So I can't say enough great things about them. Make sure that you stick around and listen, because I think it's going to be an important interview. And guys, I want to wish you good luck today. And just remember, the dollar right now is sideways, but I have to highlight that the false breakout in the dollar from yesterday was a pretty big deal in my book, so it's hard for me to be super bullish the dollar going into the end of the week. Even though I do want to buy some dollar Canadian on a dip, it's hard for me to run out right now and start just buying dollars across the board in any other pairs because of the reversal we saw yesterday. So just be careful with the dollar going into the end of the week. And I want to thank you all for being here and supporting us, ForexAnalytix. Remember, we are also we're going to have our announcement about our pricing next week, so make sure you're around for that. We are going to be raising our prices here at ForexAnalytix, but this is going to be your opportunity over the next week to really get involved with ForexAnalytix at these prices and be grandfathered in moving forward. So we released our new version of ForexAnalytix. We've released new versions on the iPad and your mobile devices. And we've been doing this for the last year and a half at a really decent price, so make sure you take advantage of it. So thanks, everybody, and have a great Friday.
Actually, Blake, I think we have 2-year birthday in a month from now.
A what?
Exactly. We have our 2-year birthday in a month from now.
It's amazing.
Exactly in a month. Yeah, it is. Time flies, huh?
It does. It does. All right, guys. Thank you so much.
Have a great weekend, Blake.
You too, and have a great interview with Justin.
Thank you, buddy.
Thank you, Blake. See you later, mate. Bye-bye.
Thanks, Steve.
So, Steve, I see two scenarios in the dollar. I want to, bounce it around with you. Is that, the big move we had by the ECB, that if we pull back, say, to 94, that would be like, some retracement from the ECB high. Huh? DXY, yeah.
Yeah, there we go. Here we are.
Okay. So, possible that even though we have a reversal week, to me, it looks incomplete because it's only 2 drives. Okay. I mean, within it, you had a 3 drive at the top, but that may be a 3 drive for drive 2. And I kind of agree with your arrows that, we should be looking to buy the dollar on this dip. Yeah, right. For a third. Okay.
It is actually quite likely. I agree with you. I mean, but on the other hand, as Blake said, and I totally agree with that. If you remember, I said it yesterday as well when we were seeing the reversals, because when we were on the webinar, we are seeing, I mean, just look how many pairs have already produced some morning star or evening star formations. Just look at this. Cable yesterday produced a morning star formation. Here it is.
At halfway back.
Yeah, Aussie is producing one today, actually. Kiwi, let's switch to Kiwi, is producing one today. Of course, we need to see the daily closes, but so far it is what it is. Canadian CPI data, by the way, 0.1, estimated 0.4, a big miss for the CAD, which, as you see, it was actually the USD count was lower on the day until we got the data, and look what happened from here, right? We got an acceleration higher, which now means that we've actually officially penetrated this channel and this confluence of resistances, which changes the plan, meaning that any pullback from wherever it comes can find actually support now in this area that we were looking to produce resistance, right? So there we go. Let me draw it here. So any pullback from whichever point back to this zone is probably going to be a buying opportunity, right?
Okay, so Steve, I'll be back in about 24. I'll be back in about 24 minutes. I'm going to watch the game.
You mean 15? Because in 15 minutes, actually, we have the the halftime.
I'm sticking around with you, buddy. I was just playing with you.
That's good. It's good for at least one of us not to be watching the game.
All right. Okay. So so we're getting, also the USD SEC. I know you want to go there. The NOK too.
The NOK is rejecting from the 820. We talked about this, although it's it's paring back its losses today because it was having earlier on. It was having quite a
done.
No, it doesn't. It doesn't, to be honest. And
neither does USD SEC.
Yeah, but something, there is a possibility that we're going to see some type of a pullback, right?
Got to take those stops out first above the high in the middle.
Might be the case. It might even make it up to 910. If we're talking about the USD SEC, 910 is actually quite an interesting level to watch to the upside, in my opinion.
It's going to be a 3 drive. Take a picture. And I am stepping away, but not for soccer.
Absolutely, might be the case. Now, having to do with cable, I want to go back to that. I was writing in the chat room, a while ago that cable is right on a resistance as we speak. I do think that this 133 zone is quite an important one. If we clear above it, which I consider it, quite a likelihood, I do think that we're going to see some follow through to the upside. RSI was already diverging, by the way, so this is something to keep an eye on. And the vast majority of the currencies are gaining against the dollar today. There is, though, one exception, and that's the USD yen, right? So USD yen is holding, and to be honest, despite having seen this break below this like ascending wedge, I have to say that so far the move lower is quite contained and doesn't look impulsive. So if the USD yen does not accelerate to the downside, rather soon, I'll start getting worried that this is not going to be resolved to the downside. We're not there yet, but this is something I'm keeping a close eye on. And as I said, I would have expected the move lower to have accelerated by now, which isn't the case. And as you see, the USD yen is holding the USD is holding quite nicely against the yen. It's actually the only currency today that it's holding against, and this is something to note. Now, let's have a look at a few of the yen pairs because we have questions about the pound yen and not only. So this is the pound yen. Now, what the situation is here, we talked about it yesterday. I see two possible scenarios. I would still favor the resumption lower. There's no question about it. Now, how is that going to happen? It might happen after having some kind of a triangle here, right? So this is one scenario. Might happen after we get an A, B, and a C, let's say somewhere here to retest this broken trend line and then moving lower. That's another probability. But as long as anyhow we stay below this ascending trend line, let me zoom out so you can see it more clearly and how important it is, this one. So as long as we're staying below this trend line, the blue broken trend line support now acting as resistance, I would definitely not be buying it. Okay, so that's something I want to make very, very clear. Now let's have a look at the euro yen. I'm monitoring this descending channel in the euro yen. You can see it here. You know, so far I have no indication whatsoever that this is definitively, you know, some kind of an impulse that has started to the downside. I mean, it can still be some kind of a correction lower before moving higher, and that's the only thing that keeps me from being more bearish the euro yen. The reason I'm saying that is because, as we've said in the past, this move lower, this one here, was exactly or almost exactly equal to this move here, right? So usually this kind of an equality like A, B, C equals A can indicate, you know, that this is a corrective move lower. Regardless, for me to even consider turning bullish, I would definitely need to see a break above this descending channel. Until then, I have to say that, you know, I remain more cautious. So in essence, from what you understand, obviously the question is, can really the euro yen be breaking higher while the pound yen is breaking lower? It can, but the likelihood is not high, right? I admit to that. So, you know, obviously something has to give here. Regardless, I do think that the euro yen looks potentially more constructive than the pound yen does. And, you know, this is something I cannot just ignore just by looking at the charts. Now, let's have a look at the, let's see, you have to forgive Dale, in real football, we have timeouts and commercials for beer and Viagra. Ziggy, oh my God. Are there any correlations, says Joe, between any certain soccer teams and risk on? Not that I'm aware of, mate. Could you have a look at the FTSE? Absolutely. Let's have a look at the indices in general. So, you know, comment number one. Does the S&P so far tell me that it has turned bearish? Answer, no, it hasn't. Actually, so far, what I'm seeing here can very easily, actually, it's more likely a corrective move lower than anything else. So until proven otherwise, this is a correction, right? So in any case, why not break higher and then resumption to the upside? So I'm starting from here because, you know, it's very well known that the S&P is the benchmark, is the barometer for risk, right? Now, if we switch, let's say, to other indices like the Nasdaq, you know, the Nasdaq until yesterday it was pushing to new highs. Although I have to say here, and that's quite important, yesterday's candle was a pretty bearish one. I mean, it was an outside black candle. It was actually a key reversal on the daily because early on the day we were pushing to all-time highs, and we then reversed lower, closed at the lows below the previous day's low, just incrementally below, but more or less that's the case. So
little three drive formation up there too, buddy. You have a big three. You have a big three, and then the last say 2-3 weeks action is a fractal of a three.
Might be the case. In any case, I'm also monitoring. Do you see this blue intermittent ascending trend line? So, you know, this is a trend line that has played a role since the end of April, right? So it's roughly a 2-month-old ascending trend line. I do monitor this. I do think that if we actually penetrate through it, it can indicate that we're going to see a move lower towards, now we can delete all that because that has already transpired. If we do see a break lower, then we might see a push towards this ascending trend line support before seeing more buying for something like this, right?
Or break it.
Yeah, of course. But, as Greg likes to say, minimum expectations. Let's take it one step at a time, right, Dale?
No, he says use stops, but don't limit your expectations.
Oh, yeah, but I mean,
He leaves targets open. Yeah.
Having to do the analysis, there is no real reason for us to start analyzing what's going to happen if we break below here, since we still haven't broken below this trend line. You know what I mean? So let's first make the first step, which is breaking below the blue trend line and start moving towards the other trend line, and then we can start drawing on the board, different scenarios, etc., etc.
Okay, well then I will talk about my 5,900 target.
5,900 target. Let me see why you're looking at 5,900 here, down here.
Yeah. It's like 1.618 of the breaks that we had in February.
No, I know, but do you see this last line lower that I've drawn? Do you see where it's pointing? I just didn't adjust it from what you see.
Oh,
yeah,
okay.
Because it was the end of that impulse there before an ABC move lower.
Okay.
So yeah, I agree with you.
We'll see.
What I'm not certain about is, how do we know we don't have another push to the upside? We might have, actually, right? That's what I'm saying. Anyhow, as long as we're staying above this trend line, I think that we need to keep in mind that the 7,430 area is the 127.2% extension of this move lower. So, that remains as an active upside target from where we currently are, if we don't see a risk turning lower from right here, right now. Okay, now, having to do with IWM, quite a bearish candlestick there as well yesterday. Is it enough to indicate a reversal? No, we would need more confirmation. Regardless, as I was saying yesterday, coincidentally, we are getting very close to an area that I think, given the prior move higher that we've seen, because let's see, from this low that we had here at the very beginning of April until now, let's say roughly 3 months later, we've already moved higher in the IWM, in the Russell, almost 16%. So that's already a very, very strong move higher, right? There's no question about it.
There was a gap the day before yesterday that gapped up, and yesterday's action makes that gap, according to Edwards and McGee, an exhaustion gap.
Yeah, that might be the case, but I would need to see some follow through today to say that, that's
well, that's just the first sign of exhaustion. Doesn't mean it's the end of the move, but shows exhaustion. Yeah, I
agree with you, but we have to take into account the following. Given the fact that we have a very nice double confluence of resistances up at 171.80, given the fact that, as you've said very, many times correctly, you can't expect perfection in the crab table. So, it's not that the market will always like to the pip hit, all the ideal levels, etc. And given the fact that roughly, since it's not exactly 3 months, it's less than that, roughly we've been moving higher, like 6% per month during the past 3 months. A pullback is more than expected, right? So as I was saying yesterday when we were actually trading at the highs, this is not the place to be looking to buy the Russell anymore. This is probably closer to the place that you would be looking for a nice reversal indication to try to sell perhaps a corrective move lower. And keep in mind that even a move down, all the way down to roughly 160 or a retest of this broken trend line can still just be corrective. So it can just be corrective, but it would still make that like roughly a 6% move lower. Not a bad trade, right?
No.
Exactly. Another thing I wanted us to have a look at is actually the VIX. And let me update this chart because I was looking at it on another platform. So so here's actually the VIX, and we are seeing some divergence. Just look at the RSI here in the VIX as well, right? So we had a new low here at at the end of the first week of June, but the RSI was still diverging. So VIX is showing some bottoming signs as well, in my opinion. Also, just look at this descending channel. We broke above it, we came down, we retested it, and we seem to be forming some kind of a bottom here. So the VIX profile would also not look bad for some kind of a jerk reaction higher. Even if that proves to be, some type of a spontaneous short-term reaction. So, in any case, obviously, risk seems to have the potential of rolling over. Now,
Nice
thank you. Now, if we go to the European indices, on the other hand, first of all, we see that the DAX reached yesterday, at some point actually, reached the top end of the next support zone I had indicated, which is here. We're seeing some kind of a reaction, but I have to tell you something. Closing below this area opens the possibility that this was a double top, obviously, with the ranges bottom being this. I also wrote that in the chat room yesterday. So if that's the case, you should expect an extension, an equivalent extension lower, and a very nice confluence of supports would be somewhere here at the 12,100 area. Why would that be the case? Because that's a horizontal area of support, and at the same time, that ascending trend line that you see is a very nice bullish trend line that has been going on since February 2016. So this looks to me like a nice appealing target down there, right? FTSE, on the other hand, I was looking for a potential, if we broke below this zone, a potential for an extension towards the next support area, which is a horizontal support area, and the 200 DMA is there. But so far today, we're seeing a very strong reaction to the upside. To be honest, this move lower satisfies the minimum requirements of a corrective move, like an ABC. Now, does that mean that it's over? No, because it might end up being some kind of a more complicated, like a corrective pattern. But I would definitely not be pushing my luck here, right? So let me show you. Theoretically speaking, an ideal target would have been there, for an equality. But has it satisfied the minimum criteria for a corrective move lower? Yes, it has, because we actually saw one move lower, a move higher, which was clearly corrective, and another push to the downside. So to be honest, I sorted the FTSE to see exactly what we got, one more move lower, regardless if I decided actually to close that position, obviously mistakenly, because I didn't like at all the price action in the DAX. We got one more move lower, one more leg lower. So, even if I had actually still that short, I would have closed it and booked profits here. So I'm not saying it can't move lower from here. It actually can. But as I said, it wouldn't be worth it anymore, because the move higher, you can see it here, that took us from an oversold RSI to an extremely overbought RSI, like roughly at 85. I view this as an impulsive move. So I had said it since we were looking for a high up there. After such a move higher, you would better be looking for opportunities to buy, at some point rather soon, and not the opposite. And if you want to, be short, make sure that you understand that this is most likely a counter trend move. Now, something I wanted to mention is that we got quite oversold readings in metals, in the vast majority of the metals yesterday in the DSI. We got, I remember very specifically that gold was below 10, and the rest of the metals were, just roughly above there. And, this is something I pay attention to, especially seeing the pullback that we're getting in the dollar, because, several of the metals seem to be on interesting support areas as well. Gold yesterday reversed. The vast majority of its losses after almost reaching the 1260 area of support and almost the bottom of this descending channel. Silver had already found a day prior support. You can see where that was, right? Platinum, let me put on platinum, also once again striving to hold this confluence of supports. Let me zoom out so you can see it here, as you see, confluence of supports. So I would be, kind of careful here with metals. They still look very heavy, there is no question about it, but selling right here, right now, seeing that sentiment is, definitely very, very bearish, and on the other hand, seeing that several of them are, testing support, I think it's quite, quite a dangerous proposal. Okay, now having to do with crude, I mentioned the other day, and I remember we had this conversation with Greg as well. For me, the ultimate target having to do with feeling certain about it was this confluence of supports. It was the 61.8, as you see, from that move higher. It was a horizontal support resistance area. It was also these channels resistance, if we extend it, as you see, and that's why you have to keep your technical analysis on the charts, in my opinion, and from my experience. This was a channel that I was monitoring when crude was recovering from there. But as you see, the extension of this channel resistance has already acted multiple times as support. 1, 2, 3, 4, 5, 6, 7. So, is this a coincidence? In my opinion, it isn't, right? So that was the 7th time, actually, this same trend line acted as support after it was acting as resistance for this channel. And we're seeing a very nice rebound from crude from that actual level. Now, is the move lower in crude done? There is a good chance that it actually isn't, right? But would I be shorting it? My conviction definitely got lower once we hit the target I was looking for. As I said, and as we had drawn, if we actually did end up penetrating this area, I would then be looking for this area, which is roughly at 58.50 to 59. And this might still be some kind of a corrective move here. Absolutely, there is that possibility. We're now retesting a broken ascending trend line support as resistance once again. So
up on OPEC decision, I think, Steve.
Yeah, absolutely. Having to do with, I think the subject had to do with Iran's production quotas, etc. So anyhow, is there a chance that we will get rejected from here and push lower once again? Absolutely, there is. But personally, I'm more cautious. Regardless, we have a very nice blog post which we launched a couple of days ago and can guide you of how to handle this kind of a move higher. Our blog is free. You can go to ForexAnalytix, and the blog area is free even if you're not a member. You can go here, blog, and you'll see it's our latest blog post. There it is, right? So I suggest you have a look at that for more information on crude. Let me go through some of the questions before we get Justin on thoughts on euro and USD ZAR. Let's have a look at the euro USD. Oh, yeah, and let me have a look at some of the crosses, by the way. Euro USD rebounding from, I've already seen some people talk about the possibility of a double bottom. Is that a possibility? Yeah, sure it is. But is it yet a double bottom? No, it isn't. Right? It's too early to call that. We're seeing a nice reaction higher. Yesterday we had a very nice outside hammer. So a candlestick, that points to further gains. There's no question about it. I mean, that's quite a bullish candlestick. I would be looking for the next area of resistance to be at 117.30. and we take it from there, right? I was always looking for 114.50 to be a very hard level to crack. And if we do crack that, I think that 113 is the area to watch. Why? Because it was a previous descending channel's resistance that might act as support. Personally, and I said it some days ago as well when actually Euro was breaking lower, personally, I'm very, very, very doubtful that Euro is going much, much lower. I do think that the market is buying into the whole ECB's dovishness, but I fail to see how ECB can actually end up being as dovish as they claim they're going to be. Okay, and explain the other reason, the reasons of why I'm very skeptical about that. Now let's briefly go through the euro and the pound crosses, and then we have a few more questions. So euros, and the reason I want to start with euros is because when we were actually rebounding, I said that, listen, I consider it very likely that we're going to see one more leg to the downside, and the areas I would be looking for a rejection and a move lower are, one, this area, the 155.80 area, that's why I had drawn this, and two, if we actually break above there, the 157.50 area. And right here at the 157.50 area, as you see, so far we're getting a very nice reversal candle today. So, if you are long the euros, something else to add here, RSI on the downside had hit 18. That is what Dale would call a confirmed low. And now the RSI was testing once again like the 60 area, which is exactly where you would like to see some kind of a reaction, if the market still wants to move lower. So I would actually caution that, if you were buying the euros, nice for you, quite a nice trade. But I find it quite dangerous owning Aussie up here, Euro up here, okay? Euro Kiwi, as you see, more of a mixed bag here because, we had one move lower, move higher, which was quite choppy and overlapping, a channeled one. Then we broke below this channel. We came back, we retested it. We, looked like we would actually accelerate lower, but we came up, we penetrated through the channel. Bottom line, technically speaking, not as good looking as the euros. So once again, I'm going to repeat that, if I wanted to be involved with one of the two, that would definitely be the euro Aussie and not the euro Kiwi. Now let's have a look at the pound crosses. That's exactly what we had drawn at the pound Aussie when it was actually forming this inverted head and shoulders formation. If you go down to a lower time frame, you're going to see it. We were saying that, this is a very nice target to be looking for a rejection. So far, this is the third time in 4 days that this same area is acting as resistance, which shows, as expected, that was quite a significant area, right? So as long as we are banging our head on this resistance, I would advise against trying to buy it here. We might actually see a rejection and a move lower. Pound Kiwi, some strong resistance is actually a little bit higher than where we currently are. Although we do have the 50 daily moving average acting as resistance here. But once again, the pound Aussie, the Aussie cross looks, technically speaking, better looking, more easy to read than the equivalent Kiwi cross. Now, let's see what other questions we have. USD-ZAR, let's go ahead. Okay, USD-ZAR, we were looking for this area to act as resistance likely. Once we broke above it, I said that the next area of resistance is 78.6, and we did get a nice rejection from there. We're coming down now to retest this area as an area of support. Now, is that going to be enough? Probably not. So I would be looking lower, right? But on the other hand, can we say with certainty that that was a corrective move that's now completely over? No, we need more price action. But I would definitely be looking lower to begin with. Now, if we break below this zone, which I consider it quite likely, I would be looking for 13.13 to be the next area of support. And, I want to see a little bit more price action here to determine the nature of the move lower, because I still think that there is a decent probability that the USD has a lot more downside left, right? Dale, I hear you breathing on the microphone, and then I'm just seeing now the time.
Yeah,
so
Justin
I guess
here.
Perfect. So let's get Justin on board.
Okay. Have a nice weekend, Steve. Great work again.
Have a wonderful weekend, everybody.
Nice trading as well. Okay, Justin, thank you for joining us today. I'm going to make you a panelist because I don't believe you brought any slides. If so, or you wanted to show your screen, then I'll make you a presenter. But this will turn on your mic. I'm looking forward to saying hello to you. I've spoken with your partner, Trent. Hi, Justin. Just turn on the volume. See if you're muted.
Can you hear me?
Can hear you now, Justin. Nice to meet you.
Likewise. We've actually spoken many years ago, but good to connect again, and thanks for the opportunity to come in and speak to your members. I actually do have some slides, so if it's possible to make me a presenter, sure. I'll just flip those on.
Great. Okay.
And just
here you go.
Perfect. And to manage my expectations and everyone else's, about how much time do I have to speak to everyone?
As much as you need.
Well,
how about a half an hour?
That's fine. I'll move through. Dale, if you don't mind, if questions come in, maybe you can interrupt me, and
I will.
And I'll be happy to stop and talk about whatever's on the minds of the people listening in. So again, thanks for the opportunity. For everyone that's listening, my name is Justin Hertzberg. I'm the founder and CEO of Forest Park FX. We are a globally regulated FX introducing broker, and I'm going to kind of walk you through quickly just my background and the history of the company. And today, because I think it's on the minds of a lot of people, are the new ESMA regulations that are coming into effect on August 1st and how that might impact you and your trading. And then I'll talk just a little bit about kind of who we are and what we can do to help you with your trading. And we're happy to take any questions that come up. So just a quick bit of background on me. I got my college degree in philosophy, and as I like to joke, none of the big philosophy companies came to recruit me out of college, and so I did what anyone else with a philosophy degree does who doesn't want to be a barista. I went to law school and ended up obtaining my my JD and my MBA with a concentration in finance from the University of Miami in Florida. I actually started my career as a securities commercial litigator and did that for as long as I could tolerate it. But quickly realized that I was a bit more entrepreneurial than your average attorney, and I left there after a couple years of practice to work for an FX prop firm who was run by a guy who at his peak managed over $750 million, and by volume was one of the largest FX traders in the world. And I thought, boy, this sounds a lot sexier than being an attorney. And I made the jump and kind of been in regulated markets ever since. Worked for several years in a variety of different roles and capacities. And in 2013, I launched Forest Park FX. We initially launched and obtained our registration with the CFTC and the NFA as a introducing broker. And then in 2017, March of 2017, we actually obtained our regulation with the FCA as an introducing broker that covers us throughout Europe as well.
So Justin, let me ask you this. With all of your experiences that you had being an in-house attorney for different companies, I see you were a litigator, so you know you're probably very focused on compliance, etc. What was your vision, yours and Trent's vision, for creating and starting Forest Park FX? Because you had been around, so you probably saw a need or a niche that wasn't being served. So I'm curious what your vision was when you guys said, let's do this.
Yeah, great question, and thanks for asking. My vision was actually that there was a great disconnect between the brokers and the end traders that existed primarily in the FX space, where the brokers offered only what the broker could offer, and the end trader was really bamboozled in a sense. They really didn't know what to look for. They didn't know what questions to ask. And even though there were some introducing brokers that existed, in most cases, they were just mere pass-throughs, where they just were sort of mouthpieces for the different brokers and trying to funnel traffic in through their websites. But they really weren't adding any value. They weren't taking a brokerage or a broker agnostic approach and trying to find the right fit for a particular trader's trading strategy and needs, and pairing it with the brokerage solution that best suited those. And so we wanted to come in and basically be that knowledge bridge that helped traders find the right solution for their particular trading strategy.
Okay, well, yeah, that's a great mission, because you know, most brokers, all they care about really in the wild west days years ago was volume and spreads, and you know, they were all over the place. I'm curious if you also think with some of the regulations, with Dodd-Frank being talked about, loosening regulations, do you think that any of these firms that, you know, there was a mass exodus of FX firms because of Dodd-Frank and compliance costs, that they'll migrate back to the U.S.?
I think if we see a loosening of regulations, it'll warm people up. The biggest impediment, in my opinion, to brokers coming back, though, is the net capital requirement. So ostensibly, a broker has to park about $25 million from the outset in a segregated account that satisfies their net capital requirement. And that's the biggest impediment, is simply the opportunity cost of not really being able to do anything with that money. So even to run a brokerage in Europe right now, even with the new ESMA regulations, you're talking about a fraction of that. So it's still significantly cheaper for firms to get operational elsewhere than it is here. So
yeah,
that would
because they don't need the same amount of liquidity just to sit by idle.
Correct. And it really comes down to an opportunity cost issue. And the truth is, even with a relaxing or a repeal of Dodd-Frank, I don't know if that regulation goes away that quickly, that requirement goes away. So I still think we're going to have only a few brokers here for the time being.
Yeah, it's you know, as a U.S. citizen, I feel that's a disadvantage for U.S. traders, don't you?
It is, because it's weeded out a lot of the competition, and competition is good for traders. You want brokers fighting with one another to win your business, and typically they have to win it by offering better service, better pricing, better products. And really, you have only two firms here that don't really have that incentive, which in a way has worked out well for us, because through Forest Park, we're actually able to offer some of those incentives with regard to service and lower cost of trading, basically leveraging our scale and our relationships with the broker to extend to the traders that come through us a lower cost of trading. But we'd all be better off with more competition on the broker landscape.
Okay, and any FX firm that takes U.S. business, they come from jurisdictions that have bad reputations, don't they?
So we have
Belize, etc.
Yeah, we have a firm policy. We will not work with any unregulated FX broker. So if you're a broker that accepts U.S. traders, but you're not regulated with the CFTC, we won't go anywhere near you. And I actually have a slide on that a little bit later on. But
why don't you carry on? Why don't you carry on then?
Just since we're on the topic, one of my mantras, and again, everyone will see it later, is return of capital is far more important than return on capital. And that's a line I use specifically to address some of those offshore brokers that are skirting regulation.
I'm sure and everything that's happening in the crypto world too, correct?
Yeah, there's just a lot of they're really preying on the trader that doesn't take the time to do their proper due diligence and is wowed and swayed by sensational marketing, and that typically works out to their detriment over time.
Okay, buddy.
All right, so quickly, just a little bit about what we do. We endeavor to help traders make smarter broker decisions. And again, that kind of goes back to what I said earlier, where we take a consultative approach where we don't try to ram down any one particular broker on one client. We try to understand how the client trades in terms of their account size, preferred platform, pairs traded, times of day, average trade size, number of trades per day, and a whole host of other factors. And we take that all in and we try to find the right and best marriage for that trader on the brokerage side. We also help to connect traders with the right platforms and technology for their trading. So we will help you to figure out what platform that a broker offers might be best, or what third-party platform or technology you might need to best execute on what you're trying to do. What we are probably best known for is providing ongoing service and support. So unlike a lot of other firms who sort of hide behind form fields and or have 22-year-old level customer service people manning the front lines,
You'll pick up the phone?
We pick up the phone, and my signature block has my direct office line and my cell phone, and Trent has his direct contact information. And
you mean people could talk to a person? You're kidding.
They could talk not just a person, but a person who actually knows what they're talking about. So it's one of our differentiators. Sad to say that that other firms simply don't do that.
Okay.
And then with all of our clients, we actively work to reduce their costs of trading through cashback rebates or better spreads or commissions that we've pre-negotiated with the brokers. So we're a pure value add. We don't charge for our service, and we make money, we earn business by providing value to our clients only. So we're a free resource and a great resource for that. On to the main topic for today, the ESMA regulatory impact. Some of you might have seen this already, read some articles, but it doesn't help to kind of go through it. And Dale, if there's questions again that come in, stop me anytime here.
Okay, well, we have a few if you want to field them now or later.
Yep, no, let's take them while they're
okay, okay. How can one recover if a broker defaults and client is a foreigner?
Okay, there are a variety of factors there, but I can say that sometimes I put my lawyer hat back on and actually work to help clients recover from brokers that fail to fulfill their obligations. So we've actually recovered over the years around $400,000 for clients who had either situations where brokers took advantage of them or didn't process withdrawals. So we actively represent our clients. Even if you're not an introducing brokerage client of us, we will represent your interests and try to obtain a recovery. So for that particular individual, I'll share all my contact details at the end. Feel free to contact me. I'd be happy to listen to the story, and if we can help you, we will certainly try to do so.
That's amazing. What is the best offshore broker for U.S. residents to trade CFDs? Example of FinPro, Traders Way, etc.
That goes back to my point of we won't work with those. We don't encourage traders to work with them, and so I am not going to address that, unfortunately.
Why can't U.S. residents take advantage of reimbursement program?
It's a regulatory issue. It's a good question. We'd love to be able to do it, but it is simply not something that regulations here in the U.S. permit. But we can, for those traders, offer them a rebate program through our company. So if they do want to open an account with one of the regulated U.S. brokers, we do offer a cashback rebate, and that can replace the reimbursement plan for those people.
Okay, and one more before you carry on with your presentation. How does Forest Park FX make money just giving advice?
So as an introducing broker, we get paid by the brokers for introducing clients to them. We get paid from the spread or the commission that they charge to clients, but there is no markup or hidden fees. So the pricing you get as an introduced client of us is exactly the same as if you went to that same broker directly. Okay. They still hold your funds, they still process your trades. We don't have any ability to interfere in any way. So it's we get paid again by the broker, not at the client's detriment, and the rebate is only a way for the client to realize a lower cost of trading.
Beautiful. Okay.
All right. So with regard to ESMA, here are the major changes and how they'll impact you, and we'll kind of go through them, but they're somewhat self-explanatory. The leverage caps are going to be significant, and that's where most people are going to feel the pinch. Is your buying power is going to take a significant hit, as many of these European brokers still offer 500 to 1 leverage. So you're looking at a reduction in your buying power of roughly 17 times. So it's quite significant. Major pairs, you're going to be at 30 to 1. Non-majors, gold and indices, 20 to 1. More exotic commodities, 10 to 1. If you're trading single share CFDs, so individual equities, you'll be at 5 to 1, and cryptos will be down to 2 to 1. These are actually somewhat more draconian leverage caps than we've seen in the U.S., which was part of the big exodus from the U.S. back with the Dodd-Frank passage. So it's definitely a big impact for a lot of traders who rely on high leverage for their strategies, or just don't feel comfortable putting on deposit as much capital as they otherwise would have to.
How many traders, in your experience, Justin, have longevity using 500 to 1 leverage?
Almost none.
Okay.
So that was my next comment. So
okay, yeah, okay.
The best traders that I know don't need more than 30 to 1 leverage.
That's what I mean.
But that said, there are plenty of people who take more of a portfolio approach to trading. So let's say they might only put $10,000 or euros in a trading account, but it might be part of a $100,000 investing portfolio that they have. And so they say, well, I want to trade it as if it's, my full portfolio. And so they trade it with more leverage than they otherwise would if they had to put all of their funds into the trading account. But generally speaking, the best traders don't need more than 30 to 1, and frankly, institutional FX traders don't get more than 30 to 1 leverage. So you can still trade with the tighter leverage caps, but nonetheless, it will still be very, very difficult for many traders to deal with. But sort of accepting that this is the new norm and preparing for it is the first step in adjusting and adapting to a changing dynamic.
All right, the next one is interesting to me: negative balance protection. Having been a broker, having had clients say they were going to make a margin call and didn't, and ran up deficits, and as a broker, I was responsible. How are they going to manage an account not going below zero, that every day you come in, they know what point during the day your account could go into a negative balance? How are they going to manage that?
So this is something that is a positive that's coming out of the regulations. There is no possibility now with the new ESMA regulations that a client can lose more money than they have on deposit. The ways that the brokers will guard against this is they will have a standardized margin stop out rate where they'll automatically liquidate your positions. But even if we had a major market dislocation like the Swiss National Bank incident from 3 years ago, where a lot of people went debit balance on or negative balance, basically, if that were to actually happen to a trader, the broker simply has to zero it out. They cannot come to you for any dollar more than you had on deposit with them. So
Okay.
in that sense, it's a positive.
Okay.
I mentioned a moment ago the margin closeout percentage. This is basically the point at which they will start to auto liquidate your positions. Historically, brokers had different margin closeout rates when they would start to auto liquidate your position. Part of the regulations is they've just standardized this, and they've said to all brokers that when a trader has 50% of the margin available that was needed to actually initiate that portfolio, that's when the positions have to get closed out. This one definitely hurts some people. The no bonuses or binary options. There's an outright ban on binary options now in Europe, and the no bonuses one often was tied to binary options, but it does hurt some of the actual reputable and good brokers that just tried from time to time to offer certain incentives to earn client business. Those have simply been done away with altogether. And again, the effective date for this is August 1st, so it is coming up. We're about 6 weeks away, and it is just something for people to really prepare for mentally and with sort of positioning their portfolio of open positions. There are a lot of questions that come up. These are some of the more prevalent ones that we've seen. How does this affect my open positions? What is professional status, and must I trade with an EU regulated broker? And this really obviously affects the ones who are either domiciled in the EU or just trading with an EU regulated broker. Before I get into the specific questions, even if you reside outside of Europe and you are trading with a European broker, you will be affected by these ESMA regulations. They do not have a separate carve out for someone in Ecuador that's trading with a UK broker. Even though he doesn't reside in the UK or in Europe, he's still going to be affected by these regulations because these affect the broker, and the broker has to apply them across the board for all of their clients.
Okay, I'm getting a question. Do these changes apply to brokers in the EU strictly, or FX brokers all over the world?
This is just for brokers that are regulated, that are in the EU. So
okay.
If they're a regulated broker in the EU, they will be affected by everything we've just discussed.
Okay, and does Forest Park have broker agreements to allow them visibility of client trades? Can you see what your clients that you refer, what they're doing?
The general answer is no. Some broker back office systems allow us more visibility than others. We have certain places where we have absolutely no insight into what a trader's activity is other than their volume. Okay. In others, we have certain back offices which will provide us sort of static end of day type reports. But we don't have any ability under any circumstances to affect or impact a client's trade at all. So clients continue to operate in full control and capacity of their platforms.
Why is FIFO an issue in the U.S.?
There are certain reasons for this. To some extent, I think it has to do with a recognition. Yeah, it has to do with a recognition of gains or losses. And basically, they don't want people only booking losers, let's say, and taking tax benefits now and letting winners run forever and not having a realized gain. I think there's an element of that there. I think there's an element of just the way that trade reporting happens that they enacted this. It's something that drives a lot of people crazy. We're
going to have to continue to live with it, though.
Yeah, I was just going to say,
okay.
Even if Dodd-Frank gets repealed, I don't know if this is high on the agenda of any real legislator.
IRS has a pretty strong lobby. How about this? What happens in the case that a trader is a non-EU client? He's probably going to have to get a hold of you. And the EU broker redirects them to a non-EU entity. Is this still allowed?
So the question of whether or not it's allowed is a different conversation, but there are a lot of brokers that have multiple offices. So you might have a broker that has a regulated brokerage in the UK, in Australia, on an island somewhere, and they may be using these regulations as a reason to say, hey, look, you're a South American client. I'll keep using them because they're sort of removed from all the regulatory changes. You're a South American resident. You're currently with our UK broker. but you're going to be dramatically impacted by these regulations, and you don't have to be. So we're going to move your account to our Australian office, and you're going to continue to trade on the same trading conditions that you've enjoyed with us so far.
Okay.
In a lot of ways, they're doing it for their benefit, the broker, but they're also doing it to accommodate and not disrupt the trading of the trader as much as possible. Now, there may be certain reasons why a trader may not want to go to that specific office, and that's something that I'd be happy to address with them on their specific circumstances and where their account might be moved. But it is something that we're seeing a fair bit of.
All right. Well, here's someone that could use your counsel. Hi, I'm from Iran. I have accounts with El Pari for 10 years now. I also have accounts with FBS, XM, and XM. Can you give me your opinion on them? I think that you probably need to contact Justin. I don't think you're going to make public statements about individual brokers during this interview, are you?
No, I'd prefer not to, but I'm happy to address all those questions offline and direct and private with the
So stay tuned for Justin's contact information, and it's also right here on our website and in the room. Okay, go ahead, buddy.
Thanks, Dale. So we'll just go through the questions quickly, and I'm sensitive on time, so I'll just try to keep moving here. How does this affect my open positions? The general consensus is that come August 1st, they are going to flip a switch and enforce the new margin requirements. So if you are currently using more leverage in your account than is permitted, you may quickly find yourself having positions liquidated for you. So it would be wise at this point in time, you've got 6 weeks or so to start paring down high leverage positions, or to explore perhaps with us, what your options are for brokers going forward. But just don't be caught unaware that August 1st, you may find yourself waking up and having all your positions closed for you. Professional status is something that perhaps some of you have heard about or been contacted by your broker. This is essentially an election whereby a client can say, look, I'm not really a retail trader. I don't want to be treated like a retail trader. I want to have access to higher leverage because I'm sophisticated and I know enough to make these decisions. To be a professional client in the EU, you have to satisfy 2 of the following 3 criteria. You have to have made substantial trades over the past year, 4 quarters, which is typically something that is a relatively easy hurdle to overcome. But the other 2 are very difficult and most people don't satisfy them. One of them is you have to have a portfolio of at least 500,000 euros. So that is money that's actually invested in various investments, and you can provide evidence of this. And the other criteria is you have to have worked in the financial sector for at least 1 year. So unless you can satisfy 2 of those 3 criteria, the trading activity criteria, the size of your portfolio, or having worked in the industry, you are not a professional trader. But some brokers are taking a very lax view of this and trying to force round pegs and square holes to continue to offer high leverage to those traders. What they aren't telling you often is that when you become a professional trader, you lose certain other protections. Your funds are no longer segregated, and you're no longer protected by the financial compensation scheme that exists in particular with UK brokers. So you give up certain rights and protections when you're no longer a retail trader, and that is often buried in the fine print or not explained to the trader at all when they make that election to become a professional. So just something to keep in mind if you're receiving information about this from your broker, or if you have questions about it, you can feel free to contact me or Trent, and we're happy to explain it all in greater detail and just make sure that you're making as informed a decision as possible. The last one, which is important, is must I trade with an EU regulated broker? Obviously, for non-EU residents, the answer is unequivocally yes. You can always choose who you want to work with, and you don't need to work with one of these brokers that are affected by ESMA. Interestingly enough, from our reading and understanding, the ESMA regulations don't actually preclude a an EU resident from working with a non-EU broker, which is one of the major differences between, say, the Dodd-Frank legislation here in the US. So if you reside in the UK, for example, and you want to work with an Australian broker, you can. And we've seen many traders doing that to stay with heavily regulated brokers, but avoid some of the strictures of the new ESMA regulations.
Okay, that's very interesting. More freedom in Europe than here for
Yes.
European citizens. You know, I just want to ask you a couple of quick questions before we wrap it up. A lot of people that I've run across, Justin, they trade everything. Okay, they trade FX, they trade stocks, they trade futures. They're now trading crypto. Just off the top of your head, are there any brokers that offer everything? I know Interactive Brokers pretty much covers everything. I don't know if they're doing crypto. Do you have access to brokers that if I wanted to trade almost every asset class available, that it would be on their platform for me to do it?
So it's a complicated answer. In the US, outside of Interactive, you really don't have that option.
Okay. Do they do crypto now?
They don't.
Okay, so there isn't anyone in the U.S. Are there?
No one in the U.S. that's doing it all.
Okay.
In Europe and some other brokers elsewhere, you can trade all of those products, but you're not trading the on-exchange core product. You're trading a CFD, or you're trading a derivative of that. So for instance, one of the brokers we work closely with is FX Pro, which I hold in high regard. They offer FX, they offer single share CFDs, so equity CFDs. They offer indices, metals, cryptos, pardon me. So they basically offer everything, but they're offering them as the off-exchange derivative of the on-exchange product. So you can access that through certain brokers that have a multi-asset offering.
Okay, I appreciate that. So let's see, any other questions? Okay, a lot of people are going to be contacting you, Justin, so why don't you put up your contact information?
Sure, and I had
Go
other
ahead,
slides.
prove us. Go ahead. Yeah, return of capital.
Yeah, so just some of the common mistakes. Given that this is an opportunity for people to maybe reevaluate their brokerage choices, we just want to make sure that people always choose a regulated broker. This is there for your protection, even if it doesn't always feel like it. In terms of choosing a broker, just don't believe everything you read. There's a lot of sensational and really aggressive marketing people out there, but we actually do deep dives into all of our brokers. We go to their offices, we know their executives and how they operate, and we try to make sure that our clients only work with good brokers. In choosing a broker, make sure you understand really their pricing model, their execution model, and how that fits in with your particular trading strategy. As an underlying tenet, not every broker and every pricing model and every execution model is right for every strategy. And for those that need help trying to find the right fit for the way that they trade, we're happy to do so. Don't use a platform for the wrong reasons. Just because someone said you need to use X or Y or Z platform doesn't necessarily mean that's the case. I'm a big believer that comfort is key. So find a platform you like, know how to maneuver it and execute on it quickly, and that's typically the best platform for you. And lastly, is just sort of a thematic review, which is don't put a good strategy in a bad environment. Understand all the factors that can affect the likelihood of your success or failure with your strategy at a particular broker, taking into account regulation, capital protection, pricing model, execution model, platform, technology, service. All those things are really all important to keep in mind. And so make sure you consider all the factors in choosing a broker. Again, quickly, how we can help. We provide broker agnostic recommendations. We work to understand your trading strategy and pair you with the right broker, and continue to improve your experience through our ongoing service support and cost reductions. And then here quickly is all my contact information. Those are my direct dial lines. It's the same way that my wife calls and yells at me about something I forgot to do. So you can always get a hold of me. Like Trent, I am one of the most responsive and accountable people in this industry. So I will answer the phone. I will get back to you. I will reply to your email. I'm frankly compulsive about all of those things. So please call us, email us. We're happy to help in any way that we can. There's no charge for our service. We're pure value add to you, and we hope you'll take advantage of that.
What a great mission you and Trent have. I wish you nothing but success. You're planting good seeds, you're out there to help people. That's a great model. And then if you make a living from helping people, all the better. And I want to thank you for sponsoring FACE. Thank Trent too. We're proud to talk about you guys every day and know that we're serving them by directing people to Forest Park FX. So great talking to you today, Justin, and we'll do this maybe next time, Trent, and every once in a while just come in and always let me know if there's some kind of change you want to let the community know about, regulatory wise or new relationships wise. There's always an open door for you.
Thank you, and I appreciate the kind words and the opportunity, and wish everyone a great rest of the trading day and a nice weekend.
Okay. Thank you very much, everyone. That's the week. Remember, thank you, Justin, again, but most of all, don't just count your pips, count your blessings. Do your work over the weekend, and we'll look forward to wrapping up the month of June next week. I'll see everyone later. Go enjoy your soccer games, and thank you for your support of our endeavors here at ForexAnalytix. And again, get a hold of Justin and Trent. As you could tell, they're going to have some good answers for you. So adios to everyone. Enjoy your weekend. See you Monday.